Well, hello there, friend. Welcome back to the Construction Leadership Podcast. I am your host, Bradley Hartman. As this QXO acquisition of Beacon Roofing is going to happen soon, I wanted to touch base with two intelligent, interesting people to talk more about it. The first is Mr. Jon Vaughan, who's been on the show multiple times before. On episode 390, he and I got together to discuss Brad Jacobs' book, How to Make a Few $1 billion. And Jon also makes quarterly, more or less, appearances as we look at leadership and business excellence through the lens of sport. Also on this episode, we had my friend, Mr. Craig Webb. Craig runs Web Analytics, and he spent a dozen years as editor-in-chief of Pro Sales Magazine. And he also worked as an editor and reporter at the Wall Street Journal in Brussels and New York. He served as chief economics reporter for United Press International, covered Congress and the White House for McGraw-Hill, and was an international trade editor at the Journal of Commerce and other organizations in newsrooms from Indiana in the United States to Italy, which is not in the United States. On March 27th, Brad Jacobs returned to Bloomberg's Odd Lots podcast with Mr. Joe Weisenthal and Tracy Alloway. And we will listen to a few segments of that discussion as we bring it more locally to the lumber and building material industry. So hope you get value from this as this acquisition of Beacon Roofing comes to a close very, very soon. As always, thank you for listening.
We have Brad Jacobs, billionaire founder of XPO, GXO, QXO, as I mentioned, basically all the XO companies, plus United Waste, lots and lots, a serial entrepreneur. Let's just put it that way. Brad, thank you so much for coming back on Odd Lots.
Tracy, it's great to be here.
All right, so congrats on the deal.
Thank you.
From what I understand, this has been in the works for quite a while, and there was a lot of back and forth.
Yeah. So before we even did Beacon, we were looking at 55, as you know, because I was on the podcast, looking at 55 different industries and trying to pick the one that matches our skill set, that matches our playbook the best, the things that worked for us at all the companies that you mentioned before. And then we settled on building products distribution because we liked it a lot, the size, the growth, the fragmentation, the opportunity to apply technology. And then we zeroed in on Beacon. And we said, Beacon is the one. That's the girl I want to marry, Beacon. And we said, this is a perfect match for what we do. And unfortunately, they didn't want to sell. So we had to do a little hostile there.
So Mr. Craig Webb and Mr. Jon Vaughan, welcome to the show.
Thank you. So glad to be here. Always good.
So Jon, it's interesting. You have this long buildup. We write a book. We plan this. We get a few $1 billion in the bank. We go to buy a company. And when we go to announce it to the world, we start off with an arranged marriage metaphor. Caught me off guard a little bit. Today is my 19th wedding anniversary, and I'm thinking very lovingly and appreciatively about my own marriage. Very little hostility in the past, mainly from my wife toward me. If this was an arranged marriage that had some hostility and the executives did not want to meet with Jacobs, in this metaphor, who's the father of the bride that arranged this, that made this whole thing possible?
Hostility in marriage usually is reserved for later, not like right leading up to it. Hopefully never. My wife loves me, still does. There's no hostility. But when you think about it, there's both parents' side, right? There was a dowry that was being prepared, and then somebody had to say yes to the dowry that was offered. And so if you think about all of the private placements and all the capital that had been raised, both Brad Jacobs' personal capital, his relational capital that he got to raise the money, the final Jared Kushner private placement, like right there at the end, they certainly wanted to use that dowry to get that arranged marriage wife. And on the other side, all the shareholders of Beacon, especially the institutional shareholders who were looking for when do we get to cash in on this investment. They saw what was happening. If you continue down that ridiculous metaphor, their daughter was getting older and not getting any better looking. And so they really wanted to make sure that they were collecting on that dowry. And so if you see that from both sides of it, like there was pressure on from both sides of it to say, hey, we got to get something done.
Why do you think Beacon, though, Jon? I mean, couldn't he have picked some other girl?
That's a great question. I mean, you listen to the whole podcast, and they tried with another arranged marriage prior with Rexel, and never materialized. And so probably because they saw what happened with SRS and their multiple when they sold to Home Depot, and thinking, hey, there's consolidation opportunity in this space. And how about you, Craig?
I didn't expect them to go for a Beacon, and I didn't expect them to start as big as they did. One of the issues in my mind is that, Brad kept talking about using AI and wanting to, do something big and fancy and creative. And in my mind, you just can't do that in residential construction very well. You can do it much better in commercial construction. So I had thought that he would probably go with some sort of company that was dealing solely with high rises and multifamily and the like. But he surprised me. And now I look at it and I'm thinking, well, now that he's got this, what's he going to do with it? I mean, can he dramatically increase the profit margins, for example? Isn't he wanting to do at least double the profits they're making now, if I recall?
I'm going to double the profit. That's the same thing we did. The same thing we did at Conway at XPO, where we doubled the profits in 3 years. Same thing we did with Norbert Dentressangle in Europe, which is a very well-managed premier company there. We doubled the profits again in 3 years. We're going to apply the same playbook. We're going to start with communicating and talking to all the people. And we announced the deal on Thursday morning, and at 11 o'clock, we had an all-employee Zoom. And I had the privilege and the honor and just the wonderful experience of doing a Zoom with thousands and thousands of Beacon employees. And it was less me lecturing and giving a speech and more asking questions and starting to learn the business.
I'm really curious. This wasn't officially a hostile takeover, although, as you mentioned, it was there. Parts of it were hostile-ish, let's say hostile adjacent. So when you come into a company like that initially resisted your overtures for marriage, as you put it, does that make it difficult to actually start to integrate this, start to change the business model? What is the relationship actually like with the workers?
Well, it does make it a harder start for about 10 seconds. But after everyone realizes, okay, this is done, we're buying, we're married, we're getting married here, we're engaged, we have to make this work, that's history, that's past. And the resistance is more on the senior levels.
Yeah, and if I recall, their EBITDA is about 9.5% is their EBITDA margin. And so, if you take a good company, I've heard that SRS had margins maybe about 12 or 13%. And so if you increase, I'm not a real math major in this sort of stuff, but if you increase your margins by that much, do you double your profit? I don't think so.
No. And when they talk about that $50 billion company, that was things that he's talked about a lot. He talked about it on the Odd Lots podcast. And then he also said that the space that they're in, the TAM is about $50 to $60 billion. So either they have to grow that, they have to grow product, they have to consolidate the market significantly. So if you look at it, in order to do that, you've got ABC, SRS, and Beacon, who make up about 40% of the TAM. ABC, I don't see selling.
Right.
And you're not going to go and consolidate and roll up the rest of the market. So even if you did, you're looking at, 30 billion. And so it's going to have to be new products or greenfields, or all of a sudden you have to make an offering in a space that you'd have to add significant value to double your EBITDA that I'm clearly not smart enough to figure out.
Yeah. All that said, I really do welcome Brad to the party. I think that he's going to bring some ideas and some things and inspire some people. I think also people were getting a little frustrated because he was doing a lot more talking than doing for the first 2 years before he got Beacon. But now he's got a chance to put his money where his promises were and, use that new AI executive that he hired and everything else to revolutionize the business. So as a person who's a reporter, I look forward to seeing what's coming next.
Yeah, I love innovation in the space. And so I'm excited to see what he brings.
Jon, what does it tell you that the very first page of the book, so the little dedication there, talked about the 3 Ps that he likes to live by, came from his wife: be patient, be pleasant, and be polite. think if you're an executive at Beacon here, who's going to be ushered out here soon with a small accounting box, maybe 0 for 3 on those. What does it tell you that he's done 500 acquisitions, more or less, in his career, and this just happened to be the first one that was hostile and just happened to be the first one for QXO? What does that tell you just from the outside about where he's at and the way he's viewing the market and what might come next?
If you look at what he wrote within the book, which was a compelling, we talked about it more than a year ago on the podcast. There was a lot of compelling things that he talked about within there, and understanding market dynamics change and things change. But one of the first things he talks about is he wants to do deals with people who want to do deals with him. He talks about patient, pleasant, and polite. And the first deal after he writes the book, it doesn't feel like he's doing those core things that he talked about at the front of the book. If I'm the CEO or if I'm the board or if I'm the executive team at Beacon, I feel like I've been fed a bill of goods on what I've read about this person before I get to meet him for the first time.
You get the feeling that he had somebody prodding him in order to make this deal go. He had been talking a good game for a couple of years, and I'm sure that the people who had invested their money said, hey, I'd like you to put that money to use, or I'm taking it out. And that could very well have been that he just went down his list and said, what can I buy that's big, that works? And Beacon was on the list.
Craig, what stands out to you in addition to Greenfield? He talked about that as obviously a tactic to really help profitability. You're not paying that premium when you're buying an existing organization. If the goal is, and it sounds he's very clear in that episode about the goals, super simple. We got a playbook. We're going to execute the playbook. We're going to double profits in 3 years. What other levers do you imagine he's thinking about or has already spoken about in that podcast or other places as he's making sure that he's going to do exactly what he said he does?
Well, I suspect that there's a lot of praying that the economy is going to get better. I was just reading some reports from Stifel in the first quarter of this year, and they said Beacon's revenues are up 7% year over year. The trouble is that it's all from new acquisitions. Their existing same stores are down 6%. So you've got that kind of a challenge going on. The other thing that he might find himself doing is when he expands is to do what some other companies are doing, which is to stop being just a roofing company and be an exteriors company. Because the number of decent roofing companies out there left to buy after Elite Roofing Supply just got bought last year is down, but you can still go after exteriors companies like Lansing Building Products or Richards Supply, those kinds of people, and then offer yourself basically as somebody who's selling the entire envelope of the house between the framing and the front gate, which is really what Dan Tinker was trying to do with SRS.
Jon, what do you think? You're Brad Jacobs. You've heard yourself just say, wrote a book on it. This is what we're going to do. We're going to 2x profits in 3 years. Where do you start?
I'm similar to Craig. If you either have to go be incredibly acquisitive in a roll up of the medium to smaller size, which doesn't seem to be something that he's talked about that he wants to do. He did talk about giving the M&A guy at Beacon, just the license to go out and see what it looks like to just go acquire. But whether it's sightings,
but they've already been acquiring. They were the most acquisitive company in the last year. So
that's right.
That you got to put that in context too. Yeah.
That's true. That's a good point. But then beyond that, it's getting into windows, getting into, we talked about the waterproofing side, but getting into more commercial on the waterproofing, getting commercial on the siding, getting commercial on windows and exterior doors. I think that if it's a full wrap envelope and you go from frame to dry in, that's where you're going to have to go in order to get to this $50 billion and double the profitability side of it.
Your initial takeover target, though, was a company called Rexel, which I think is a French electric equipment supplier. Is that right? Okay. Right. And they said no. They rejected you. And you moved on pretty quickly. Why did you change your minds on that one? Is it the case that French companies are harder to buy than American ones? Or are you worried perhaps about how tariffs would impact that business versus something like roofing?
Well, We never confirmed that we were talking to that company publicly. Somehow, some reporter got that through all
darned reporting and actual journalism.
But when we were reportedly looking at that French-based company, which has a lot of its biggest country is the United States, actually. But when we were looking at that, we were reportedly looking at that. This was still in the previous administration. Tariffs wasn't really in the air. So it really wasn't about tariffs. It wasn't that some other company was not good. The company you mentioned is actually a really good company and has great prospects. But Beacon was perfect for us. I mean, Beacon is absolutely perfect for our particular skill set. The kind of things we do to increase the profits of a company, this applies to Beacon, which is why I did, something I've only done once before in my life out of more than 500 acquisitions, which is I did an unsolicited takeover. We proposed an alternative slate, and we did a proxy solicitation. And it was because it was such a good match. It was a match made in heaven that we should just not run away from.
So, Craig, as you listen to Brad, and I will say he sounded somewhat defensive and kind of backed away from that, just about the Rexel deal. How do you analyze kind of his situation, protecting his reputation and communicating with the press and the industry at large?
Well, I think one of the morals of the story there is that you can control your reputation and you can promote your reputation in a certain way, but people will remember you for what you've written and what you've said, and there will come a time in which sometimes those words will come back and bite you. I mean, at the very start of this event today, you were quoting from the 3 Ps at the front of his book, and so when there is a variation on that, that's news, and that gets people to think, well, maybe it's not quite as true as he thought he was. He should know better, though, as a public figure and a person who's worked hard to make himself as a public figure, that there are going to be other people who will figure into what amounts to his overall reputation, including people who will be fired by him, people who will be purchased by him, and people who will be reporting about him.
Jon, you're the advisor. I want you saying, yes, Brad. You're acknowledging that you should advise him to go into the dealer level versus staying further up in the supply chain. Craig, I want you to take the opposite, saying, no, it's a bad idea. So, Jon, let it rip.
My argument would be you've got a space that's been significantly consolidated. You've got large players in there. And through a lot of this consolidation and aggregation, there is room for innovation. But a lot of those businesses are being run by traditional, long-term, dyed-in-the-wool lumber people. And so to make some of the wholesale changes that would need to be made around technology, around AI, around logistics, you're going to have an outside thinker to do it. And Brad has exhibited the ability in blue-collar, non-technology driven businesses to be able to come in and run a playbook that changes technology in a meaningful way in businesses that prior had not had that level of technology. So if you take a $10, $12, $15 billion business that has been trying to figure out logistics and technology and had some level of success, but not that big step up, and you bring in AI-driven, very tech-forward, very modern views of how to layer in tech stacks to be able to improve efficiency, pricing, purchasing, cash flow, all those sorts of things. He's exhibited the ability to do it, and this is an opportunity to do it at large scale.
I think one of the challenges, though, Jon, is that in all of his previous businesses, a piece of equipment that he had in Paducah, Kentucky was basically the same as the piece of equipment that he could have in Sacramento, California. And in our business, the products you use, the way you build, it differs even with every single different piece of dirt that you're putting your product on. So I do believe that it's an incredible challenge to consolidate and build that business to be bigger. I would much have rather have seen him go after, let's say, commercial or build to rent or multifamily, where first you take the customer out of the picture, the ultimate buyer of the product out of the picture, so that you don't get them messing around with the layouts and the designs and everything else. And then second, you do things at a scale and volume that you basically can replicate. A concrete building in Paducah can be very much like a concrete building in I won't say Sacramento, but maybe Boise, with the codes being the way they are. I would advise Brad to go after the commercial side of businesses, like, for example, sometimes the installation business or sometimes the insulation. And I've already talked about the exteriors businesses. I think those are all possibilities for him.
All right. Jon Vaughan, is there something bouncing around your pointy little head over there? Maybe a little conspiracy theory, Jared Kushner, he's on the board with the administration. Got anything there?
Well, I mean, it's something you can't ignore, right? I mean, you talk about having antitrust clearance before it even starts. You can't ignore. I know we talked about that it started under the prior administration, but also thinking about if we want information about, like, hey, what is it going to look like in the future? I'm not saying that he got anything from Jared Kushner, but when you're a major investor with a large private placement, and you've got ties to the current presidential administration and understanding of what future financial policy and tariffs and economic policy are going to be, I wouldn't say that it's out of the realm of possibility to say there may be a connection there and how they think about the business.
It's interesting because I was just going to say no. I didn't have one, but anyway.
Thank you for hanging me out to dry
Apparently
there.
you did. That's exciting. I'm glad we got that in here.
Any of my contact information with anybody.
Craig, what is most interesting to you as you kind of look toward the future here? The closing in theory should happen in the next week or so. What are you going to be anticipating with the most interest?
Well, the deal is supposed to close on April 28th. So shortly after that, the new results are going to come out. And if, as is predicted, the March was a very good month at Beacon, he's going to look real good very start. The day he arrived, the numbers are going to be better than previously had been forecast. So that's going to look good for him. Winning over customers, I think, is going to be one of the most interesting things that's going to happen this summer. When SRS got purchased, I remember listening to various people who are in the roofing business, and the question was asked, well, now that Home Depot owns SRS, are you going to move over to them? And from what I can tell, the Home Depot buying SRS did not change the mix at all in terms of, whether you chose ABC Supply or SRS or Beacon or another one. So that's a good thing, going forward. Those things in general, I think, also have to be taken against the context of where the economy is going. And by God, there's a lot of cracked crystal balls right now in terms of people being unable to know where we're going. One of the good things, at least, that Brad has going for him, as he's pointed out on the broadcast that you've mentioned, is that almost all the product is American made. And then the other wild card is storms, hurricanes, hailstorms, that sort of thing. Beacon used to traditionally say that they got a lot of their money from Mother Nature, and they were looking for bad weather. Hey, one good hailstorm can really make a lot of difference in terms of how the roofing industry goes and grows.
Yeah, absolutely. And I think, well, terrible to say, long-term trends, looks like that's going to be a pretty good business to be in there. Jon Vaughan, any last thoughts?
It will be interesting as much as anything. There is very infrequently news in the LBM space that requires an emergency podcast. Most everything that happens in the industry is recycled other events that are just kind of resurfacing. This is different, and so it's fun. And so while most everything that I've said is conjecture based on my knowledge of the industry and guessing on things based on what I've read, it's interesting and it's fun to be able to have conversations about things like these. And it just makes our industry more fun when we can have conversations like this.
And I also believe competition makes us all better, and us thinking harder, analyzing different scenarios, and admitting to ourselves that actually we were surprised at the way this happened. I think ultimately that competition all helps us be better managers and leaders and thinkers, which is a good thing. Craig, thanks for making time. Any parting thoughts for us here?
Just that along with Beacon coming in, there have been several new startups in the industry from lumber yards and other companies doing things. A lot of people think that we've got this dying industry or this consolidating industry. And it is as dynamic as it's been in quite a while. New thinking coming in makes this a great story to cover.
Love it. All right, Mr. Craig Webb, Mr. Jon Vaughan, appreciate you guys. Always enjoy learning from you and listening to you. So thank you.
Thank you.
Thanks, Bradley. Thanks, Craig.
All right then, friend, how did that go? Hopefully you enjoyed my conversation with Mr. Craig Webb and Jon Vaughan. If you did, please do us a favor. Please share it with your network to help them be better leaders and better thinkers when it comes to our industry, the uncertainty that we're facing, and different options and alternatives to best provide leadership on our way forward. I would also say, in preparing for this episode, I revisited the book, How to Make a Few Billion Dollars by Brad Jacobs. As I said before, and I will say now, this is a good book on general leadership. I would strongly recommend it to a friend. There's some really interesting things and a combination of topics that are not typically found in a business book per se. And you get the bonus of trying to get deeper inside the mind of someone who's going to be disrupting our industry. And I firmly believe any sort of competition forces everybody to be better, to deliver more value to our customers, to the people that are actually out there building America. So we're going to wrap up there. You, my friends, you're owed nothing. Deliver value first. Make it a great week.